So how then, Michael, or how are these private equity companies or these private companies, how are they valued? How often do they get valued? Because I know it's not like a ticker symbol that you can look up because it's not publicly traded. So how does one assess the underlying value or the health of the private companies if they choose to invest in private equity?
Those companies are generally valued by the fund that invests in them on a periodic basis. Sometimes it may be monthly. More often, it's quarterly. And what normally happens is those private companies, some of them are quite large private companies, and they have the traditional financial reporting that public companies do, but it's just not published. Right? They do it internally. And so they do have their weekly financial reports and monthly financial reports and quarterly financial reports. And the private equity investor can look at those reports and see if they're on track. And they will revalue that company, every month or every quarter based on the financial information they get and whether that company is on track, hitting its budget. The best way, Dean, that I can kind of describe it, think of a private company in the valuation of a private company like your house. Okay. So you have this big asset and you sell a house, today, for, $500,000. Okay. Tomorrow, is that big asset, it's privately held, is it going to be valued any differently tomorrow?
No.
Probably not. Next week, is it going to be valued differently? Probably not. Next month, maybe a little bit. In 3 months, you may see a little bit of a change, but it's a big asset and it doesn't change day to day. And so generally the private equity firms look at the valuation on a monthly and quarterly basis.
Would it be fair, Michael, to make a comparison to an individual who may own a group of warehouses? Maybe they own some office buildings, or maybe they have an apartment complex or something like that, and they're looking at that. There's no valuation done on that real estate on a daily basis. What you're really looking for is free cash flow, right? Am I rented? Are things going up in value? Because you're not buying and selling that real estate on a daily basis. And so would that be similar to like a publicly traded real estate fund versus private real estate? Are we thinking about the same thing there?
Yeah, perfect analogy on that, Dean. And so one of the things that you look at when you are doing valuations, intra-period, in every month or every quarter, kind of intra-period there, you look at extraordinary events. Now, if the warehouse that you're talking about or the apartment building, if it had a fire or it had damages or something extraordinary happened to that asset, yes, you would kind of look at it and it would, have an opportunity to revalue that. Same thing with a private company. If there was something extraordinary that happened to the private company, it got a brand new contract with the government, or it lost a big contract, or one of the key executives left or something like that, that may cause someone to dive down a little bit deeper and revalue that asset. But your analogy is a perfect example.
Starting your route to retirement.